This is your tax class in a nutshell. I'm Samuel Singer at the University of Ottawa.
And I'm Allison Christians at McGill University.
Today, we'll be discussing employment income, the characterization of employment income, and anti-avoidance rules. So what we're going to cover in this course is all these different types of income that lead to the amount that you're taxed on in Canada. And we're going to go through them sort of one type of income at a time. And you'll notice as we go through them, with each type of income, there's a characterization question. Should it be in this basket or should it be in another basket? So here we're obsessing about the characterization of whether something's employment income or whether it should be considered business income. So we're going to talk about income from office or employment, and then later we'll slip into income for business or property. Then we'll talk about taxable capital gains and capital losses. And then finally, towards the end of the class, we talk about these other income and deductions, which are just these interesting parts of the tax system that are treated a little bit differently, like lottery winnings. So let's launch into employment income. The big question that we're covering here today is, are you an employee or are you an independent contractor? So essentially, are you earning employment income or are you earning business income? We're going to talk about the advantages and disadvantages of both, and we'll reflect a bit about how those might be in the eye of the beholder, and there might be some disagreement. Then finally, we'll talk about the trouble you can get into if you try to incorporate as an employee to get access to some tax benefits and how that can really not work out for you. I'm going to start with subsection 5.1, Professor Christians, because I think it's nice for us to get grounded in the Act.
Yeah, always.
And always, right? So here we are with our Act. We're in the very first few pages.
We haven't got very far. Not too far yet. 1, 2, 3, 4, and 5. That's it.
I know, I always get really excited. I'm like students when we get into the 18. I'm like, look, we're at 18. Whoa. We're talking about deductions. Exactly. So you see income for office or employment, and there we see that it's a taxpayer's income from an office or employment, and that includes salaries, wages, and other types of compensation. And we'll spend a little bit of time later in employment income talking about what types of employment benefits should be included and counted as compensation and taxed. When we go to our section 248 definition, because, you know, in the Act, they like to, you're at section 5 and you got to go to the back of the book. And we're there and we're looking at what employment means. And that means the position of an individual. So employment income, is it always humans?
Yeah, so this is an interesting idea, right? It's a conceptual idea that employment income is compensation for services, labor, and labor is something only a human can provide.
So we're always dealing with individuals or humans when we're talking about employment income. And we also have another definition in section 248, which just talks about what we mean by an office, because, you know, people get a little bit confused by why in subsection 5.1 and 2, it talks about income or loss from an office or employment. And office is just defined to mean things like a judicial office or an office of a senator or even the office of a corporate director. So that is just, that's put in under employment income. So from now on, when we say employment income, we mean income from an office or employment. Let's talk about what an independent contractor is. We already talked about the most important part, which is that it's a human.
Exactly. So we've got to have a human. You can't have a corporation being an independent contractor.
Right. And so that's actually often confusing for students because when we think about business income, which is what an independent contractor earns, they don't earn employment income, they earn something business income. They're not a corporation, and many types of entities can earn business income. A person can earn business income, a partnership can, a corporation can. And so we need to know that an independent contractor who earns business income can also deduct business expenses. And they are a human, which means that they have no separate legal personality, right?
Right. So I know this is really confusing because a business is like a state of mind. It's something that you do, where a corporation and a person, a human, are, you know, entities, bodies, right? And so, but sometimes you equate business with company. We might even interchange those words, but they're not the same thing, and we really have to try to keep them straight when we get to the tax consequences.
Right, and I tell students to ask the question when someone says "my business." You want to try to figure out what they mean. Is it are they running their own business, you know, off the side of their desk as an individual, or is it actually incorporated or a different type of entity? And so that means if you're an individual and you're running a business, and if something goes wrong, then you are legally responsible. There's no separation. And if you decide to get out of the business, it doesn't keep going like a corporation, right?
There's having a business, and then there's having a corporation through which you do business. Big difference.
Yeah, and I mean, it's interesting because when I teach business associations, we talk about the different types of entities you can choose. But one of the things I emphasize is that you can switch your entity over time, right? You might start your business by being an independent contractor and then realize, you know what, this business I'm doing, it's got risks. I don't want to mix it up with my house and my personal accounts. It's time to separate things and incorporate. So we've got some names for an independent contractor that I try to remind people of, because there's all these different words that we use. Like, I'm my own boss.
Right. I'm self-employed.
Right. I'm a sole proprietor.
Right.
That one doesn't roll off the tongue in quite the same way, because there seems to be some preference for independent contractor relationship in the case law, people trying to get characterized as an independent contractor. And the exception to that tends to be people trying to seek access to benefits who want to be characterized as an employment relationship. But other than that, we see a lot of businesses and people who are deemed employees who try to be treated as independent contractors. And I guess the question is why? Why, if you are paying someone to do a job, would you prefer to have an independent contractor?
I don't want them to be my employee, because if they're my employee, then I have a whole lot of obligations, withholding and, sort of taking care of a lot of things I don't have to worry about if they're an independent contractor. And then I'm also I have to treat them in a certain way that I don't have to if I just have a contract with them. So I can, if I have an employee, I can't just get rid of them if I don't need them anymore. But an independent contractor, tomorrow I don't need you, then I don't need you, and off you go.
So it's actually effectively, in some ways, easier and cheaper for the person who's hiring, right?
Right.
Because you don't have the administrative cost of having a payroll system, although you still have to pay them through a system, but not the whole complicated part of having withholding and remittances to the government. You don't have to pay the extra amount that are called employer contributions to the Canada Pension Plan and employment insurance. There's no unions involved, right? No benefit, no negotiation for health plans. And as you mentioned, all these differences in employment law. So it's a strong preference in some situations for employers.
Definitely. Yeah.
But why would you, if you were someone who could be characterized as an employee, why would you want to be an independent contractor?
So that's because present me doesn't understand the risk future me is going to have to live with, or doesn't understand the costs that I'm imposing on future me. So present me looks at the options here. I can either work, in which case my employer is going to withhold taxes, and I don't want them to do that. I want all the money. And present me, the work, if I'm employed, the employer is going to control me and take away my freedom, and I don't want that. I want to be free. But future me says, oh man, maybe I actually did want to be part of the social safety net. Maybe I actually did want some some of my rights protected in this relationship. Maybe I didn't really want to live in a purely contractual relationship with this person, that I wanted to have some more bargaining power.
The present you is excited, as you said, about the freedom and about being their own boss and literally getting more money on the paycheck, right? Because you don't have that huge amount withheld. That's exciting until you have to pay taxes.
Yeah, until next April. Exactly. Present me thought that was great, not having tax withheld, and then next April me is like, no.
I forgot to put that in the separate account, and I spent that money. Yeah, and that present you also finds out later that you probably should have been charging GST if you were above a certain threshold. Yeah, and so lots of things can go wrong. Where we've all had this experience of future me talking to present me.
Yeah.
And having some regret. Okay, let's talk about how you characterize an employment relationship. And there's kind of a messy sequence of case law that we always have to refer to. So I think we're going to talk about 4 cases fairly quickly today.
Yeah, that's right.
Weeb, Sagaz, Royal Ballet, and Connor Homes. So let's start with Weeb. Weeb was a company that installed doors, and they hired a bunch of people to do the installation for them, but they hired them as independent contractors. Right? They were required to pay their own taxes and deal with their own responsibilities legally. The Canada Revenue Agency comes in and says, no way, you are employees and the company should have been withholding and paying tax and paying the contributions.
Yeah, so we have this control test, which seems to be the most important. I often, I'm sort of guilty of lopping off the other three tests just to focus on the control test, but that's, who makes the decisions of day to day. And you have the ownership of tools, like who is the worker who's installing this door? Is it their screwdriver, or is the screwdriver provided by Weeby Door? Then you have this profit loss scenario, and then the integration test, which I think is kind of messy.
Yeah, so the control test, usually it can be kind of easy, although we'll see in the case law around Royal Winnipeg Ballet that not
necessarily so easy. Yeah.
Exactly. Ownership of tools. I often talk about being a professor and how, I can show up to the university with my own tools that perhaps I've purchased, but I'll put the PowerPoint on, and I try to make an argument that I'm an independent contractor, which doesn't go very well. And then I notice that I'm in a classroom and that there's a huge overhead behind me, and there's all this equipment that's being supplied. And now in the pandemic context, there's a lot of support for me in terms of remote teaching. So you look at the tools, and depending on the trade, you may have more, you may have less. You might just be talking about a pencil, or you might be talking about heavy machinery. In terms of profit or risk of loss, I always think about this as you have skin in the game. So if you work faster, you might make more money. And if you mess up, it's on you.
Yeah. So as an employee, you are very likely to be paid for work that you've done, even if it wasn't really the best work that you've done. And you're not likely to face the loss that's associated with you not doing a good job in general terms.
Whereas if I was paid as an independent contractor to create a video, perhaps, for your class or from some tax news website.
Right.
Yeah.
Right. And if I didn't like it, then I would just say, sorry, Sam, you're not getting paid. And then you would have put that time in, but because you're not my worker, I don't have to pay you if you didn't fulfill the contract.
Exactly. And there's all sorts of ways to contract to kind of protect you from having to pay me for work that you don't like.
Yeah.
And then in the integration test, I find messy.
Yeah, I have a hard time with this one. Like I get the basic idea that you have to think about, is the worker integral to the big picture of the business? How do you do that? I think that Weeby Door is not overly clear about that, but I take it that there's something about this, but for, like, without this, no whatever, and then that makes you an employee somehow.
Also, there's that whole idea of whether I could hire someone to do something for me. Like, can I hire someone to teach my tax class? Will you teach my tax class for me?
No, well, I don't think that's right. Yeah, I don't think you can hire me to teach your tax class. Yeah, I see what you're saying. Yeah, good.
So that's Weeb, and everyone talks about Weeb Door, and there's actually a wonderful video that talks about it in more detail. So we're just doing a quick summary version. Sagaz is what follows, and essentially it confirms Weeb. And they talk about how there's not one conclusive factor, but you got to look at everything as a whole. And they sort of just repeat this, that you want to look at the worker's equipment, whether you can hire your own helpers, how much financial risk, there's the skin in the game again, how much responsibility you have for investment, and whether you can profit. So they have a nice list there that really just confirms Weeb.
Yeah.
And then we go to Royal Winnipeg Ballet, and at that point we're worried about intention, right?
Yeah, this case is a lot of these, I find a lot of these cases a little hard to read and a little hard to figure out what the takeaways are. But I think by the time we get to Royal Winnipeg Ballet, we are starting to coalesce around the idea that maybe it actually does matter what the parties think they're doing or want to be doing.
Agreed. Like, it seems like at Royal Winnipeg Ballet, so these are dancers for a ballet company in Winnipeg, and they had understood, both parties, the dancers and the Royal Winnipeg Ballet Company, had understood that the dancers were independent contractors and not employees. And they acted that way in all sorts of ways, including they were even registered for GST. Canada Revenue Agency said, no, you are employees. I
think the CRA thought, how can you have a ballet without dancers doing what you directed them to do? They really focused a lot on control there. And I think the tax court picks that up.
Yeah, and this is a tough case, right? Because they were scheduling the ballets. The ballet dancers were told when to show up. They didn't pick what ballet was going to be performed.
Right.
They basically coordinated the whole ballet so that, and the dancers were to arrive and perform. So the Canada Revenue Agency really felt like this is an employment relationship. And the Tax Court of Canada agreed, but then the Federal Court of Appeal said, whoa, wait, you ignored the intention of the parties here. And if you look, there are a number of indications of their intention to be treated as independent contractors. And you can't just skip that part. In fact, they seem to put it as like the first step.
Yeah, almost a threshold.
Yeah, and so they say it should be considered as more than a tiebreaker. And what they're telling us in Royal Ballet is you want to start by looking at intention. And then you want to see whether the actual relationship on its facts match that intention.
So look into your heart first.
Exactly.
And then see if your actions accord with what you said was in your heart.
Right.
Something like that.
And it means something like that. And in practice, what this looks like is you will not see an independent contractor agreement does not say something along the lines of, we have the intention for, this to be an independent contractor agreement, because you want to have evidence of the intention.
Yeah.
But the CRA will follow the law and go to the next step and say, okay, well, who's controlling here? Where's the equipment coming from? What about the risk of profit or loss and integration?
So by the time we get to Royal Ballet, we already have this kind of multi-factor thing going on from Weeby Door, carry through sagas. The cases were kind of going back and forth. Did intention matter? Did intention not matter? The Royal Winnipeg Ballet case kind of puts that conversation to rest. Yes, it does matter. And in fact, it sort of this first step is that intention matters first, and then you take all of those factors. But even so, at the end of this case, somehow it's just not clear. It's not obvious that it's step one, step two. I'm not sure why, but then pretty soon we get yet another case on the exact same idea in the Connor Holmes case.
Now in Connor Holmes, though, it's like I think they do use the word step one and step two, right?
Yeah.
Which, like, as lawyers and law students, is very soothing.
We like
We like
that. And all they do in step one is just refer back to the Royal Winnipeg Ballet. So what do we do? Like, you sort of, it's a little discomforting because you think once you have Royal Winnipeg Ballet, you think, okay, now we've finished. We understand our test. Then when another court case comes along, you say, okay, well, what did I miss? Like, what is there that's new here? And I think we're saying maybe because Royal Winnipeg Ballet didn't say step one and step two explicitly, that somehow the FCA just thought, okay, we're just gonna say that's what we meant. We meant step one, look in your heart. Step two, make sure the facts match what you say was in your heart.
Yeah, exactly. And so then we have this very nice statement, which if you were working on an assignment or exam, for example, on this topic, you'd think, oh, Connor Holmes, that really spells things out. I can say it. It confirmed Royal Winnipeg Ballet's statement on intentions and followed Sagaz and Wheat.
That's right. That's how I'd wrap it up.
So I think this part called the personal service business, which is an anti-avoidance rule, I think this part really came in to punish people for bad behavior.
Yeah, taxpayers are wily. You tell them they can't do something and they think, I'm not allowed to do it that way. I've got another way to do it. And I'm going to try it again.
Totally. And here, my understanding of the personal service business rules is that they were introduced because people were not only were they trying to be independent contractors so they could get more deductions and have a higher take-home pay, et cetera, more be their bosses, but they wanted to go further. They wanted to access lower corporate tax rates because the corporate tax rates are lower. So someone who says, you know what, I'm like, when I decide to incorporate as a professor, I'm going to incorporate as a professor, and because not only do I want to have independent contractor benefits of being able to deduct more and deduct my home office more and do all sorts of things, but I want those lower corporate tax rates.
Yeah.
And I want to split my income with, for example, my spouse, right?
Yeah.
Or my kid.
Your children,
So there's two things that sort of happen there. Is one, more generally, that often doesn't work, right? Because you're trying to get access to these lower corporate tax rates, but we do tax you when you take money out of the company. So if you need all the money right away.
Yeah. It's not really going to help you to park it. Yeah.
Yeah, it doesn't work. So as long as I need my wages, I'm going to need to get them out.
Yeah, okay, I see what you're saying. So if you're living paycheck to paycheck, it's not going to help you to incorporate your business and then immediately pay it out to yourself.
Right.
However you pay it out to yourself is you're going to face full taxation, so you're not going to get the benefit. This is really, there's a policy angle to this because it really is only beneficial to have a Prof. Sam Inc. if you don't actually need all of your wages and you are going to be able to park them in the corporation. And that kind of means it's only really useful to relatively affluent people.
Right. And then that's when you get something called tax deferral value, because you can park and leave money in there before you take it out. So that's mistake number one. And mistake number two that often happens is that you think, oh, I'm going to be able to split my income. And so this is kind of difficult for folks to understand. But in terms of being able to split your income, the idea is that because there's an entity involved, I can pay myself, Sam, as an independent contractor, as an employee, and then I can also take money out as dividend, sure, but then I can also pay like my kid or my spouse, right? And then because we have a progressive tax bracket system, overall we'll wind up paying less tax.
I'm going to provide the same service that I was doing as an individual, but I'll do it through the corporation. And then using the corporation, I'm going to be able to sprinkle it across taxpayers.
Yes, and so we have all these rules that come in to prevent it. And so as you were saying, like I think they did the kiddie stuff first.
The kiddie
like
tax,
they can't just, like my 6-year-old, I can't actually give dividends to my 6-year-old and get that tax break. And then I think later now they have more recent changes, right?
So we have this TOSI, the tax on split income.
So essentially the tax on paying, like the ability to give your minor children money to lower your tax burden, and the ability to split with adult children and spouse has decreased significantly over time. And those are different anti-avoidance rules that have been introduced because essentially the tax system was losing too much money. And there was a significant fairness issue because you couldn't do it if you were earning employment income, and you could do it if you were earning business income. But now, more specifically, there's this personal service business rule, which is an example of yet another anti-avoidance rule that's in the act. My students never understand it until I use the word punishment. And it's essentially punishing you for being too greedy.
Yes.
And
yeah.
Like you went too far. Right. And you wind up with like punitive tax rates. Like it's very bad. They really do try to punish you. And my understanding is that there were just so many people incorporating who otherwise would be employees that the losses were significant, and they had to come in and do something about it. So why would a business organization prefer to pay a corporation instead of an employee? So those are the same reasons that you discussed before. You love paying a corporation. You don't have any employment standards. Your corporations aren't unionizing together, right? You don't have the same withholding obligations if they're a corporation in Canada, and you have a bunch of easier burden. You have an easier compliance burden overall.
Yeah.
So why would the employee prefer working through a corporation rather than being an employee? And those are a lot of the same reasons that we discussed as to why you'd want to be an independent contractor. Which are best summarized by money, 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 and be your own boss.
Yeah.
And as we discussed before, there are probably a bunch of anti-avoidance rules that would stop you from doing some of that, like splitting your income, because those rules have become really much more heavy recently, but you're trying. And these personal service businesses, again, it's a name that we give when you have been designated as something that really is an employee. Yeah. And once you get that designation, you get punished by the Tax Act. And we have a nice little summary here of all the ways that you get punished. One is that you're not eligible for the small business deduction on your corporate tax rate.
Right.
So, and the other one is about not being eligible for your general rate deduction, which essentially is like the reason that you incorporated.
Yeah, I mean, we really don't want people to do this. We just don't do this, right?
Exactly. And you get restricted deductions, which is like one of the main reasons you want to have business income in the first place, is that you think that you're going to have a lot more deductions, although you also have to pay for the cost of those expenses. So we see a very punitive, and that's why I like to say that sort of on the spectrum of greed, right? It's like the Tax Act looks very poorly upon this move of becoming an incorporated employee. Yeah. I thought it'd be fun to wrap this up by talking about a couple of examples about whether they're an employee or independent contractor. Yeah. Let's start with the research assistant.
So the research assistant has their tasks assigned to them. On the other hand, they often can work on their own schedule. They use their own almost always use their own tools, like their own laptop, their own computer, their own desk, their own lamp.
But they, like if they're a tax RA, they're using TaxNet Pro, which the university got them access
provides
to.
them, yeah.
And really, it could go either way. I mean, in most universities' contexts, the RAs may well be unionized, and there's a payroll system in place, and you're definitely going to be treating them as an employee. But there's some situations where you can imagine contracting out. You know, as a lawyer, you contract out to do legal research. So you can imagine, you know, you say, "Oh, I'm going to do that for $5,000," and if you wind up spending 3 years on it, that's your loss, literally.
Yeah, that's
right?
it. Yeah.
How about a landscaper?
They probably come to my house with their own tools.
Yes.
They probably tell me what the landscape's going to look like. I probably don't, but then I might say, well, no, I don't want the bush there. I want it here or something. I might direct the manner, not the manner, but the product. I might direct the outcome.
They probably
Also
work for a lot of people.
Yeah, they don't just work for me, unless I have just a giant landscaping project and maybe they only work for me for 6 months or something.
Yeah, or you're like Martha Stewart and you just have a landscaper.
Okay, so it depends. Again, it depends on the facts. Yeah. Translator, exact same problem. Am I controlling them? Are they? I think the tool they're using is their brain. So probably there's not too much tool. Profit loss. So the landscaper probably has a profit loss, but the translator, like I'm probably going to pay them, right? Well, if they do a terrible job, but I won't know. If I knew, then I wouldn't need a translator. So,
but I think with the translator, if they're charging you like 20 cents a word, and then it winds up taking them so long to do it, then that is a loss of their time. Like and if they can do it more efficiently, you know, they already have translated something like that before, and they have a lot of the language, like an illegal translator. But then I can also see that some people would be full-time working for the government, translators, you know, and there would be some coordinating person who gave them work. So again, fact specific. What about the trucker?
Okay, so the trucker, interesting. Like a long haul trucker, like somebody's driving across Canada with so they probably are in control of their own schedule to some extent. I assume, don't know, that they either own or rent their own vehicles and pay for their own gas and insurance.
So someone who had their own truck would be in a different situation potentially than someone who was like leasing the truck. There's no easy way to do this. You got to start at the beginning and figure out what was the intention. And then you look at the facts using the four-factor test to say, okay, where do we wind up here? Do the facts match the intention? And it's actually, I think, one of the most frequent questions that come up in law is someone should be treated as an employee or independent contractor. And you get a lot of drafting of contracts to try to express the intention one way or the other. So this is a pretty important and practical area of your tax law class that you'll wind up applying going forward. As just a last comment, I know they've tried to computerize this recently, and they'll have you feed a bunch of these factors into the computer in the CRA, or, you know, one of the private companies will tell you what they think your status is. Then now the debate has been about, well, what facts did you give the computer?
Yeah, as soon as you start thinking an algorithm is going to solve this problem, I think, you know, you have to come to terms with the fact that somebody's got to write the algorithm too, and they have the same problem we do. We have to analyze, we have to interpret, and we have to apply.
This was your tax class in a nutshell, and we'll see you next time.